Hey guys, Mike here. So obviously, I thought today was a strange day in the market, another red day. I'm not surprised about that at all, but it was certain things I'm going to show you that was just very weird to me. I'm not sure how you felt about it, but I'll show that to you. We're going to go over some current news that came out that I think is very important to know, and then three things that are affecting the market right now in more of a negative way than a positive way. And I'll show you exactly basically why we're selling off and why the market is trying to find another bottom, whether that's June lows or new lows, one of the two. But what I'm saying, what I thought was weird was you had cryptocurrencies up, and some of them were up double digits today, but also the BTC shorts were up as well, which is kind of strange to me, right? Because then when you go over to stocks, the crypto stocks were down. I mean, Coinbase down 7%, Mars 3, Riot was down as well. So that was kind of weird to me because usually they go in unison. Everything else pretty much red across the board. You got some green here and there sporadically, but mostly everything down. All the big boys were mixed. Some were slightly green, some were down. And Arctic K, of course, just continues to get beat up at 38. But then you have people, they're selling the volatility, right? But then they're also selling the S&P. And so that's kind of interesting there as well. Meanwhile, it was a risk-off day. As always, I can show you the QQQ divided by the SPY. So I thought that was strange. I don't know, it was just weird the way things were correlating. Usually things go hand in hand, did not go hand in hand at all. And so people were buying BTC or people were loading up on shorts as well. So interesting there. And I got to tell you, this is how weird bear markets are. If I had told you, I just ran across a stock, so I was going to bring it to your attention. If I had told you, here's what you got to do. Sell everything you own right now in tech, because it's going to get crushed, and just buy H&R Block. H&R Block. And what would you say to me? Put in the comments, what would you say to me if I said that, right? And again, I didn't know anything about this until I ran across this yesterday. I just had to be looking through stocks. And look at this right here, H&R Block. In this bear market where the NASDAQ's down 30%, the S&P's back in the bear market territory, and here you got this one up 95%. And it's not a meme stock because you see the rise, right? That slope. This is not a meme stock. It has just gone up and up and up and up. And here's a hint for you. When I looked at the chart, those who like to take seasonal trades or something, y'all might want to look at the chart from January to June, all right? Over the last, say, 6 or 7 years. You might find something. I'm just saying, I put it on my calendar to watch out for next January. But of all the stocks, it's like, wow, H&R Block, who knew? Man, doing taxes and stuff, I guess, or whatever else they do. Another thing going on, which, of course, the market will react negatively to this is the jobless claims because it's still just a hot job market, right? I mean, jobless claims increased by 5,000. Woohoo! Continuous claims dropped 22,000. And so as long as that continues, is exactly what the Fed and Jerome Powell keeps harping on about the employment and the rising, or even if wages just hang out where they're at, still too high. And so you get those out and the market goes, I'll just keep selling off because that just gives them more gasoline on the fire, right? To keep raising the rates like they want to do it and be aggressive. And you can see what happened here. I mean, look what happened to the mortgage industry, for God's sakes. The 30-year fixed up to 6.43% today. If you want to refinance on the 30-year fixed, looking at 6.42%, up 23 basis points from a week ago. And so that just continues to happen. And you can see we ain't seen rates like this since '08. And I'm telling you right now, don't think they ain't going up here, because this right here is only 1.5% above to where we start seeing between 7 and 8%. On these interest rates. And if you get anything out of this, guys, please hit that like and subscribe button and think about sharing the video. I sure would appreciate that. And so, of course, this is terrible for the real estate industry, as we know. And, of course, it depends on, I guess, what area you live in the country, but most areas are cooling off because people just can't afford it. I showed you the difference in just the monthly payment and stuff yesterday. I mean, it's amazing. It really is amazing. And looking at the things that are really affecting the market and why the market is selling off and might continue to sell off. I see a short-term bounce at some point in time. First one is this right here. And we're talking about the yields here on the bonds. And what's happening is, for the first time since 2006, less than 20% of the S&P 500 stocks dividend yields are actually less than what you can get on a 10-year Treasury note. And I just heard somebody talking about this today, how they just bought the 2 and the 10-year bonds because it's just guaranteed money. It's backed by the government, so they're not going to be losing anything versus buying stocks and just watching them go down, 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 down even more, right? And they may be collecting dividends, but the stocks are going down, right? When you just get even a higher yield on those bonds. That's what I was talking about. When do bonds come back in favor, and how is that going to affect the stock market? Because people are putting money in bonds, they're not going to be putting that's money that's not going in the stock market, right? And so that's something we got to think about. On top of that, the other thing is, and this is what really is affecting, to me, like the number one reason here, the market sell-off is, look in November here. Fed funds rate targets, right? Well, it went up, right? It was 50. That's what we thought was going to happen, was 50. And now look at the increase. Now they're expecting another 75 basis point hike coming in November. So remember, we don't have a meeting in October. And so, when these start increasing, of course, the market's going to try to find where they feel the price for stocks is appropriate, or the overall indexes, that is. And then you go over to December, again, we increased again because they thought it'd be 25. Well, now they're saying, nope, I guess it's going to end up being 50, and so that's where we're going to be. So that's what they're projecting, because of what the Fed said yesterday about what their projected rate is by year end. And it's no guarantee this is going to happen. But obviously the market doesn't like it, and yes, it is trying to. Everybody knows I hate the term price it in, but I don't know what else to say. It's just trying to find where they feel, with the rates going up like they are, with the projected rates going up, that is, that where they feel the multiples are correct, right? And so that's why you're seeing this sell-off. Who knows how long it will last? But you've seen this anytime the future Fed funds rates start to increase over what they thought it was going to be, we get this sell-off, right? And so that's where we're at. And the other one, which I showed you this the other day, but this really affects the generals more than anybody else, the big boys. But as you can see, I showed you this the other day about stock buybacks, right? And when the market starts to sell off, when you see stock buybacks going down, and so far we didn't see that through Q1, but then I ran across this data yesterday, which, guess what? Q2 2022, it dropped from like 284 billion from Q1 to 220 billion in Q2. Now, obviously, I want to see Q3, which we'll have to get through first to see. But remember, I showed you when we start seeing these go down, it's not a good sign. And it could be because companies are starting to buckle up their chin straps and tighten down, right? And start realizing, wow, we need to keep cash on hand because we don't know where we're heading right now. It's too much uncertainty out there. And we don't know how low the stock is going to go. And so they stop buying back, which, of course, that's less shares being bought by them. You can see I showed you how much Google and Amazon and Apple, the king of share buybacks, do and how much they spend. And so that is a big thing when it comes to stabilizing the stock, and why you could see right now why the big boys are starting to drop. Right? Apple's dropping, Google's dropping. Google's hit a 52-week low. Facebook's at a 52-week low now. And there's one other, but I can't think of what it is. AMD's a 52-week low. A new 52-week low, that is. And so, that's something, again, I'm going to keep an eye on. It does mean something, I'm telling you, because it's billions of dollars, okay? I mean, think about it. If you're spending $10 billion in a quarter buying back stock, that's a lot of stock. It's a lot of shares, all right? And it takes a lot of people or institutions to pick up the slack when you're not buying. So, and then, of course, what happens? Institutions see that, and if they see that buying is going down from the company itself, then they may look at it as bears and go, I think we'll hold off too. Let's see what happens here. And so that's something to think about as well. But, again, tomorrow's Friday. Weekly options are expiring. We'll see where they want to take it. We had two, obviously, big days of sell-off here. So, we'll see where this bottom is going to end up being. Eventually, yes, like we always get, we'll start to get oversold again. There'll be some kind of bounce. Again, people come out and say, this is it. This is the bottom. I'm suspecting we're going to end up touching at least June lows, which is like, 2.9% away on the Qs, I think. We can do that in one day. But I'm assuming if it does touch down that, I expect we get a bounce, right? Because that technically is some kind of support level, I guess, and psychologically at least, you get a bounce, and we'll see. I mean, that's kind of what we're looking at. So, but that's what's going on. That's where we're at. That's the news, and I'll end up seeing you guys probably Sunday, unless something happens really crazy tomorrow. So, have a good one, guys.